In the dot-com bubble event, the S&P 500 lost 43,000 of its value between the year 2000 and 2002, and the Nasdaq did not return to its 2000 peak value until 2015. The collapse of the dot-com bubble contributed to one of the mildest recessions on record, following what was then the longest economic expansion in the US history from the year 1982 to 2000. The Fed Chairman Alan Greenspan raised the Fed funds rate from 4.75% in the early 1999 to 6.5% by July 2000. Chairman Greenspan issued a warning on the January 20th, 1999, that the investors were seemingly pricing in a much higher profit growth rate than recent corporate earnings reports that had suggested. He said, the recent behavior of profits also underlines the unusual nature of the rebound in equity prices and the possibility that the recent performance of the equity markets will have difficulty in being sustained. At that time, the S&P 500 had risen 61.7% over the last 2 years, while the tech-heavy Nasdaq Composite was up 77% in the same period. Frenzy.com stock buyers mostly ignored Greenspan's warning, and the Nasdaq gained 7.3 points on the day of his warning to close at a record high of 2,415 points. Greenspan's warning eventually proved to be the wise one, but he was more than a year earlier. The Nasdaq didn't reach its dot-com bubble peak until March 2000. After the dot-com bubble burst in the year 2000, the overinflated Nasdaq lost more than 75% of its value and wiped out a generation of tech investors. Those losses left the stock market in a vulnerable place that got worse in the fall of 2001, when the devastation of the September 11, 2001 terrorist attacks and a series of major accounting scandals at corporations like Enron and Swissair spurred a stock market crash. The S&P 500 had lost 43% of its value between the year 2000 and 2002, and the Nasdaq did not return to its 2000 peak value until 2015. Do you like this video? Drop us comments, click the like button, and share the video. See you!